Well, let's take a look at some stocks that may not be moving markets today, but our guest thinks deserve some recognition. Let's bring back in Chris Versace, Tematica Research Chief Investment Officer. We were talking about EVs before the break. There's a play in there somewhere that you're liking, right?
Yes, there is. It's a company called
Infrastructure is what we're talking about.
Well, infrastructure, yeah. So there's a couple different aspects to the infrastructure bill. With regarding EVs, I actually like ChargePoint. Ticker symbol CHPT. It's a play on the pain point, right, as we see EV adoption, right? All these cars moving around, they do need to be charged, right? So that's one that I really do like. And you look at the share price where it's kind of pulled back a little bit. You know, we have a $15 price target on it, and we own it, just to be clear, in the Action Alerts Plus portfolio. We like it as a longer-term play. So that's
why hasn't it done better? I mean, we had the infrastructure bill passed. In theory...
So it's a great question. No, it's a great question. So the way I kind of think about it is if we were to go back, 2 or 3 quarters ago, we saw more typical infrastructure companies, Vulcan Materials, United Rentals, which we also own in the portfolio, which we also like quite a bit. They were kind of starting off and then they kind of languished, right? What we were waiting for is confirmation that, yes, the spending is ramping. And when we look at that type of construction, we get the monthly construction spending data out, and non-residential construction in particular has been strong and strengthening over the last few months. And that's why you've seen like United Rentals go from around $330 a couple weeks ago to right around $395, $400 as of earlier this week, right? So the market's looking for confirmation. I did a podcast conversation with Orion Energy, and they do a couple different things, including building EV charging stations. And they confirmed that, yes, the bill has been passed, the funds are weaving their way through, right? And they need to get into hands, products need to be developed, plans need to be laid, that sort of thing. So we should see strength from that side of the infrastructure bill really start to pick up in the second half of the year.
But were you surprised by the reaction, the stock reaction on the back of this announcement between Tesla and Ford and GM?
No, I wasn't because
ChargePoint still benefits, right? The more adoption there is, it's not like ChargePoint. Tesla's win comes at the expense of ChargePoint.
Music to my ears, because you're 100% correct on that. So there seems to be, and I made this point. If we were talking about regular infrastructure, right, we wouldn't be like, oh, only Caterpillar's going to win, or only this company is going to win. You would say, wow. There is a lot of spending coming. It's going to be a rising tide that lifts a lot of boats. And it's the same thing here. But for some reason, right, whether it's ChargePoint, EVgo, Blink, they have been kind of in this war, if you will, with Tesla shares. Because late last year, earlier this year, bad news for Tesla hit the EV charging stocks. And now there's been some headlines, understandably so, that Tesla is making these partnerships. So the thought process there was like, oh, this can't be good for anybody else. And then we find out, no, this is just a connector. And oh, guess what? Tesla, with Ford and GM, they're influencing what's likely to be the standard. And everybody else comes out and says, we'll have those connectors too. We're back to a rising tide.
Well, I mean, if you think of it as it's like gas stations, right?
100%.
Like, it's not like people buy Shell over Exxon because they have more gas stations.
By the way, Tesla drivers already go to ChargePoint. You just add an adapter.
That's correct.
Yeah.
Yeah, you're both making excellent points, and it confirms what I'm saying, so I love it.
There's one other stock that you like that I want to pinpoint because it had a really bad day yesterday. I'm talking about UnitedHealth. After the company came out and issued a warning, said loss is going to be climbing because people are doing more now, elective surgeries coming back. So their costs are going to be going higher. It was a really interesting day because UnitedHealth doesn't tend to move that much usually, but it plunged. Other health insurers plunged. So why are you looking at it?
So we're not actually looking at UnitedHealth. Right?
Oh, okay.
So in the portfolio, we have a company called Elevance Health, okay? Mm-hmm. So similar, and did it get hit yesterday? Of course it did. A whole kit and caboodle, including CVS, got hit. So I think it was kind of a knee-jerk reaction. From my perspective, we've been liking picking up shares of Elevance Health between 440, 450, something like that. And this kind of knocks it down below that level. The funny thing is, the day before, Elevance, getting ready to make the investor conference rounds, came out and reiterated its guidance, which says, hey, we're going to grow our earnings 12.5% in 2023. So I think when you compare, contrast that, if Elevance was seeing what United was seeing, they wouldn't have said that. So I think that's an opportunity for ELV shares. And again, you really need to understand, just in general as an investor, what you own and kind of what's pushing on those respective businesses.
Differentiate even within the same sector there.
100%.
Chris, it's good to have you on today.
Thank you.
Thanks for sticking around. Chris Versace, Tematica Research Chief Investment Officer.